Hey there, future investor. Why don't investors play hide and seek? Because good luck hiding when the market's seeking. Today, I'm diving into the world of mutual funds and showing you how to start investing right now. So grab your coffee, sit back, and let's get those dollars working for you. First things first. What exactly is a mutual fund? Think of it as a big pot where lots of people put their money together. This pot is then managed by a professional who invested in a diverse portfolio of stocks, bonds, or other securities. The goal? To grow your money over time while spreading out risk. Sounds good, right? Now let's talk about the different types of mutual funds. There are three main varieties: equity funds, which invest in stocks, bond funds, which invest in bonds, and money market funds, which invest in short-term debt instruments. Each type has its own risk and return profile, so you can choose one based on your comfort level and investment goals. Okay, so how do you actually start investing in mutual funds? Step 1. Open an account with a brokerage firm or an investment platform. Some popular options include Vanguard, Fidelity, and Charles Schwab. These platforms give you access to thousands of mutual funds. Plus, they offer tools and resources to help you make informed decisions. Step 2. Do your research. Look at each fund's performance history, fees, and the expertise of its managers. Websites like Morningstar can provide in-depth analysis and ratings. Remember, past performance isn't a guarantee of future results, but it can give you an idea of how well a fund has been managed. Step 3. Decide how much to invest. A common strategy is dollar cost averaging, where you invest a fixed amount of money at regular intervals, regardless of market conditions. This can help reduce the impact of market volatility and allows you to buy more shares when prices are low. Step 4. Make the investment. Once you've chosen your fund and decided how much to invest, it's time to pull the trigger. Most platforms make this super easy, with step-by-step instructions to guide you through the process, and that's it. But wait, there's one more thing. Stay engaged. Regularly review your investments and make adjustments as needed. The market changes, and so should your strategy. Investing in mutual funds is like planting a tree. It takes time and care, but the rewards can be significant. So why wait? Start today and take control of your financial future. All right, folks, that's all for today. Hit that like button if you found this helpful and subscribe for more tips on growing your wealth. Until next time, happy investing.